The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with us this evening. How's the volume, folks? Can you hear me all right? Would you somebody just type in the question box, if you would, that you can hear me all right? Let's see, who have we got? Hello? Nobody yet. Can you hear me over there? Yes, we can. Oh, Joel. Joel from Florida, from Palm Beach. Oh, Vero Beach, Florida. Hello, Joel. Good to have you with us. Mark L., the great Danielcode trader who's been so busy with new job offers all the time to keep managing factories that he hasn't had a chance to do his trading yet. Well done. Merry Christmas. And to you, Martin, as well. Thank you. So, folks, it's Christmas Day down under in Australia here. And it's Christmas Eve for most of you up in Canada, America, the UK, and last night my children said to me, "Dad, it's Christmas Eve. Why are you preparing a webinar?" And I said, "Well, I wanted to have a talk to all of our clients, or as many as wanted to be with us for the webinar, and there's much to talk about. So I thought for those of you at least who can't be with us today, you'll have this video of this will be posted and you'll be able to look at it over the holiday. So amazing how many of you are with us, and I do appreciate it. Albert's with us. He's a tutorial guy. Alex is with us. Andrew's with us. Bo Johnson from Sweden. He's actually a tutorial guy many years ago, but we haven't seen him for a long time. But Bo, very special Christmas greetings to you. Graham, you too, my friend, over in New Zealand. Joel, of course, we've said hello to. Mark, Martin, more and more of them. The Peters, Monty, and Mike, the Big O. Mike had a particularly tough trot. He's been undergoing some chemotherapy, and it's pretty rough. And I know there'll be a lot of you with us today who are not feeling so well, who've had the COVID, who've had some other health problem. And I'm thinking of all of you and grateful that you're with us. And Alan, thank you, Alan. Thanks for making an effort tonight. Of course, always. Alan, I look forward to being recovered enough to talk to you next week. Talking of people who are ill, I've had a terrible dose of the old-fashioned flu. As those of you who were with us last week probably realized, I was gasping and sputtering, for which I do apologize. And I went to bed after the webinar last week, and I slept for hours and hours, and I just got sicker and sicker. And eventually I got to see a doctor, but that wasn't until Tuesday for various reasons. And I'm halfway through a dose of antibiotics now and getting better quickly. So I do apologize for all the coughing and sputtering last week, and tonight I hope it will be a whole lot better. So Martin, yes, Mike, you in particular, I know you've had a very tough trot, my friend. Scott's with us. Suicini's with us. Hello, Suicini. We love to have the ladies with us. We don't have many ladies, and we particularly welcome them when they come. And Suicini's a lovely lady. She's a Danielcode tutorial lady and a bit of a demon trader too. She's pretty good at it. Scott's with us, and Trevor's with us, and a whole lot of you. Quite a big turnout considering it is Christmas Eve. Here we are, so that's grand. Okay, so let's talk a bit about all the things that are on my mind or of interest, and let's move on. So we know that markets are rational, orderly, and sometimes predictable, and that's all because of the Danielcode. And here, as this changes, thank you, Suicini. Yes, great for the new year. Here's our hero. This is actually a photo of a painting by Michelangelo, and it's on the ceiling of the Sistine Chapel in the Vatican in Rome. And I particularly like this because it shows Daniel as a vigorous, strong young man, and we tend not to think of him that way. If we think of him at all, we think of him as an old grey-beard prophet, and I think this is a particularly apt representation of him, because we do know he was a very vigorous person, a very, very dynamic person, and achieved so much. He went from being a hated Jew and a slave, literally, and he finished up being one of the leading men in Babylon and the Persian Empire, where he'd been taken into captivity by the Medes and then later the Chaldeans. So that's great. I like that, and I like to think of him this way. So talk about Christmas. So Daniel, about 620 BC, he was a Jewish prophet, which is why when I welcome you for Merry Christmas, I also welcome our Jewish friends. And we have a large number of them at the Danielcode, and they have their own Christmas celebration, but they, more than anyone, should be thinking about Daniel. He's one of their forefathers. So he gave us these marvelous numbers from which I discovered the length of a synodic month and a solar year, which doesn't sound like a big deal, but remember these numbers were written about 2,600 years ago. And that makes them a very big deal. And of course, everything we do at the Danielcode is derived from those numbers. And that's how the Danielcode was created. Christmas celebrates the birth of Christ, as described in the New Testament. But it's a relatively new celebration dating from about the 6th century and placed on the date of a traditional pagan celebration. So you might say, well, 6th century is a long time ago. Well, yes, it is, but in terms of what we are working on every day, which came to us or was written down at least 2,600 years ago, it's not so long. So here we are, folks, Christmas 2020, rejoice and be merry. And speaking of being merry, I'm very blessed. Bo also is very blessed. My wife is Swedish, and she rolls out these marvelous Swedish treats for us on important occasions, one of which is glögg. I probably not pronounced that properly, Bo, but glögg is a Swedish drink. It's based on basically red wine, and it's blended up with cinnamon and a bunch of other herbs, and it's absolutely fantastic. So as I was preparing this webinar for you late yesterday afternoon into the evening, my wife gave me a glass of glögg, and then I had another glass of glögg, and I can tell you on an empty stomach it's fantastic, and I really was feeling peace on earth, goodwill to men. And I like this particular verse. It's a very old carol that many of you won't be familiar with. God rest ye merry gentlemen. I like the idea of at Christmas that we would be merry, that we'd be happy that we're celebrating this event and remembering that Christ our Saviour was born on Christmas Day. Well, literally we have no idea when he was born, but it's the day historically that we celebrate the birth of Christ and all that it means to us. So let's move on. For traders, 2020 this year started shiny and bright, didn't it, and full of promise. Then we had the devastating Australian bushfires. It's easy to forget, isn't it, just how desperate they were, how dreadful it was for people. Whole communities lost their houses, many people killed. Just the pain and anguish that it caused to them all was terrible, and we forget about it so easily. A few months later, they had the same thing in California with the wildfires, and then we got COVID at the end of February, and it's just progressed from there, hasn't it? Importantly, during the year, we had gradual recognition that China is a threat, something that hasn't been clear in the past. For which I blame Bill Clinton, who agreed to let China into the World Trade Organization and was very confident that they would keep to the rules and keep all their promises and undertakings, which of course is a joke. They did none of that. Anyway, many years ago, now moving on, we had this year a US presidential election, which you'll all be aware of, or most of you, and the repercussions of that we're going to find out. And I think it's going to be an interesting year. Endless issues on social media, on and on and on. I don't get sidetracked by social media because I don't have anything to do with it really, other than an occasional post on Twitter and Facebook. And of course, the other big issue of the year was Brexit, Britain's exit from the European Union, which has been full of drama and spice, and endless negotiations going nowhere until today, when we've just had an announcement that Britain and the European Union, or at least the leadership, have agreed a future trade relationship which will essentially allow Britain to trade with the European Union free of tariffs and taxes, which was always one of the main aims of this. So during the year, Australia, after the bushfires, we had an election, and this is a copy of a slide from the 2019 Christmas presentation, and we can see Scott Morrison on the left. He's the guy who won the election and is our new Prime Minister, and the guy on the right's Bill Shorten, who was the Labour candidate and espousing socialism. And as usual, the media got right behind the Labour candidate, and the pollsters had us believe it was a done deal. So it was a great relief to see Mr. Shorten defeated. This is also a slide from last year's Christmas special presentation. Just to remind you, there's Jeremy Corbyn, who was the leader of the British Labour Party and an absolute dyed-in-the-wool red socialist. And there's Boris on the other side, who's now the Prime Minister of Great Britain, and as it says on the sign, get Brexit done. Well, today we get the news that at last it is done. These are a couple of villains from the last administration in the Tory party. John Bercow, or Bercow, I think you pronounce it with the speaker. He was an absolute horror, and I'm trying to think who the hell he was representing. He was ostensibly a member of the Tory party, but as Speaker of the House, he went out of his way to frustrate anything to do with Brexit. And of course, since he's lost his endorsement from the Tories and is now no longer the Speaker of the House, he's been pushing very hard, as have his supporters, for a imperial honours, for a usually often enough. These guys are good serving politicians. When they leave the lower house, the House of Commons, they get elevated to the House of Lords with a peerage, which is what John Bercow has been seeking robustly and loudly, and I'm delighted and thrilled that Boris has had the good sense to say, you're kidding. An absolute horror. Standing next to him, Philip Hammond, the Chancellor, the Treasurer, essentially of Great Britain, who was a dyed-in-the-wool Remainer. The Remainers were the people who wanted to remain in the European Union in this titanic battle between Leave, that finished up getting a majority in a referendum, very small, about 51.5%, maybe 52%, and the Remainers. And the reality is that the vast majority of the Tory party who were in government were actually Remainers, and with their turning their backs on Boris as a prime ministerial candidate and going with Mrs. May was just hopeless, absolutely hopeless. But anyway, eventually good sense ruled, and we finished up getting Boris as prime minister, which is pretty good stuff, and he's got it done. This is also a slide from 2019, and this is what I was thinking about the US elections in December last year. Trump's an unabashed market booster. Sanders is unelectable. Warren is unelectable. Mayor Pete is unelectable. Bloomberg is unelectable. Democrats will finish up with Biden, who's a weak candidate. who is the Democrat savior? I think that question's still open, but I was rather chuffed that most of the remarks I made to you in December last year have proven to be correct. Okay, so this month, folks, we celebrate 13 years of the Danielcode. The first, I think I've been saying 12, and it's actually 13. The first article I published with Financial Sense, and which spurred the release of the Danielcode website, was, I think, 11 December 2000, and I'm going to say 11th December 2007. So this is something I've taken just from the front page of the Danielcode website. I probably need to rewrite it. Years have gone and water's flowed under the bridge, but the fractals of Daniel's time formula and converting them to price and vice versa, absolutely amazing. And it's certainly been a great John Crystal Ball. Good on you, Alan. I wish. But anyway, that was one time at least. So this is something from, have I got the right slide for you? Yeah, I have. No, I missed it there. This is the one I missed. That's where we were. We jumped two. Go back. We jumped one. Best forecast of the year for 2020. I think undoubtedly Danielcode's The Fourth Seal. This was written in Christmas last year, 2019. And the whole of it, if you'd like to read it, is actually on the Danielcode website. Click on the link that says articles, and this is just headed 2019. And it's written by a young man, Frank D.B., who came to Taupo, New Zealand, to do a Danielcode tutorial back in 2011. I say 2010. I think he thinks it's 2011, and he'll undoubtedly be right. And he's a young gentleman. He's a farmer from Belgium, and he brought his lovely fiancée with him, Anne. They're now married with two beautiful children. And Frank said to me, I've never seen a financial chart. I've never read a financial paper. I don't know anything about trading at all. But I like your writing so much that I want you to teach me. And that happened to be the tutorial where for the first time I taught the fourth seal, which is part of our forecasting capabilities. And Frank was very taken by that, in fact so taken by it that he made that his specialty. And he's just focused on the fourth seal ever since, which going on. I mean, time runs, doesn't it? That's 9 years ago. Extraordinary. This is part of the forecast he made in 2019 that the market would be making new highs in 2021. And that sort of kept us on the bull side throughout this year. Now, remember the flash crash at the end of February and into March this year. Honestly, how you could remain bullish during that period, honestly, I have to say I don't know. But Frank did, and those of you who follow the Fourth Seal would have seen his comment, which I highlighted for you in a webinar called Days of Wine and Roses, because trading was just so fantastic. And in there, he actually came out in his weekly commentary and said, I know it sounds silly to say this, but I still firmly believe that this is only a correction because I'm sticking with the forecast of new all-time highs in 2021. So that was as gutsy as hell, and no doubt that was the greatest forecast of the year. This is one of his charts that went with it. For our forecasting, we use 6-day charts, 12-day charts, and 24-day charts. So every bar on this chart is 24 trading days. So that's sort of a Danielcode monthly chart, if you like, 22 trading days in most months. And he's looking for the reversals of the Danielcode ratios. And this is part of what he said. I had the heading, longer term analysis of the SPX. Let's start with a 48-day trading chart. Every bar on this chart contains 48 trading days. which he says is around 2 months. 48 is, that's a even longer version of the 24, so I've misread that. Here he's telling you what he's looking for. And to cap this rally, we need a 59 cycle. So you can read what's written there. But what he's talking about is not just a 59 cycle. He's talking about the Danielcode death cycle, which is a pretty rare creature. We've only seen it once in recent times, and that was at the 2007 highs, which I'm going to show you as we move along. It's a very special time cycle. It's 59 high to high on the first hop. In other words, it's not the and half, twice, 2.5, etc. It's on the first hop, 59. That's traditionally that works on the 6-day chart, where each bar is 6 trading days. That's what he's looking for, and he's looking for very, very bad news in 2021. You'll see that as we move along. This is, you can read this for yourself, this is part of what Frank wrote in that article, where he's very concerned about the global financial system with interest rates so low. This is the whole argument of the central bank priming the pump and then priming it a bit more and priming it again. And logically, I mean, I'm amazed. Your brain's got to work on 2 levels. First of all, you can have a thought yourself, and then you can realize that what we do for our business, we follow the chart, and having a particular thought doesn't really matter one way or the other. The charts will tell us everything. But the amount of money that these central banks have created to get interest rates down to where they are is so extraordinary. I mean, it's hard to even comprehend it. I was brought up in an era where first mortgage rates were 6.5%, and those first mortgage lenders that would have been the banks in the day would lend you a maximum of 60% of the valuation or the purchase price, whichever was least. Second mortgages, which was sort of finance company money, was 12-13%. Now we've had this complete change over many years, where interest rates are effectively zero for all intent and purposes. I think the Australian government's just done a round of debt financing, and the rates are negative. They're getting paid to borrow money. You have to be a thinking person about all of this. How long can that go on? How does it get reversed eventually, and what are the consequences? And they're pretty dire. And so much of this, of course, is going to turn on the 2 Senate elections in Georgia coming up in January. The position, for those of you who don't follow US politics, is that the Democrats control the House now with a reduced majority, but still a good majority. They control the White House with Joe Biden, the president-elect. Excuse me. And now the question is whether they can control the Senate. At the moment, the Senate's pretty much on a knife edge. The Republicans have a majority of 2. And if the Democrats were to win both of the Senate seats up for election in early January in Georgia, that would give them a tie in the Senate, which meant that the Vice President, who's going to be the lovely Kamala, I used to call her Kamala, but I'm told it's Kamala, as Vice President-elect, has a casting vote in the Senate. So that's a very, very important event coming up, because should the Democrats get control of the Senate as well, oh boy, get your hard hats on, Larry Dooley. I mean, it's impossible to think that after what the Obama administration spent and what the Trump administration has spent, that anyone could spend more. But I think if they get control of the Senate, you're going to see a whole new massive, massive wave of spending. But thankfully, the probabilities of that are not high. But again, with all elections, we had the media and the pollsters promising a Bill Shorten Labour win in the Australian elections, and we had them, go back to 2016, Hillary was across the line. That was a done deal, wasn't it? And it didn't turn out that way. So we'll see what happens. But that's a very, very important date coming up and going to give us much to think about. So here's the fourth seal update. So since December 2009 on equities, the fourth seal's forecast new highs in 2021, which meant a disaster-free 2020. And despite the February-March mini flash crash, that's how it's worked out. As we get closer to the major 2021 DC time signals, they're the 48-day charts, the 24-day charts, we can move to the 6-day chart, and that'll give us much more precision in timing the end of this massive bull market. A lot of that's going to depend on what happens with the Senate election in January. Should the Democrats get control of the Senate, I can see that date coming forward a bit, but we'll see. The main thing is that's likely to be the most important forecast next year, so make sure you subscribe to the fourth seal at the Danielcode. And I spoke to Frank last week and maybe earlier this week, and he's going to try and get us a new article, which he said he might find some time between Christmas and the New Year. He's a very busy guy because he's running the family farm and got considerable business and financial obligations. Okay, so this is the last time we had a DC death cycle in equities, and this was 2007. And you can see the first 59 cycle ran from a swing high to a swing high. That's the first element of the death cycle. And it has to be on the first hop. That's 59 from wherever point it starts, 59 cycle. That's 59 lots of 6-day bars. So it's 59 days on the 6-day chart, remembering that every one of these bars represents 6 trading days. Then once that cycle's happened, we look for it to repeat. And you can see from the high, and the bar actually gave us the closing high. The next bar is actually the highest high, which was the high of the whole rally after the recovery from the dot-com bubble crash. But the Danielcode time cycle took us to the closing high. That's the bar that had the highest close, not necessarily the highest high. And 59, if it repeats from there, look where it gives us. It gives us the closing low in March 2009. Again, not the chart low. The chart low came the following period at the Danielcode blue line, 666. The number of the beast, the mark of the beast, was extraordinary, wasn't it? And that's where that low came in exactly. And what we're going to be looking for next year is something like that sort of a setup, remembering that markets rhyme, but they never actually repeat. So there's going to be some subtle differences, but we're all over it and excited about it because, in bull markets, if you live long enough, you make most of the money. In bear markets, you make more than the money because you get the big run downs, then you get the inevitable rally, then it goes down again. You can get 2 or 3 times the actual dollar value of the push down. But it's certainly going to be exciting and philosophically, I'm sick of bull markets. I want to have some decent bear markets for a while. They're much more exciting. Now, I shouldn't say that. That will upset all the punters who are locked into stocks and shares. But don't worry, you can follow the Danielcode report and signals. We'll give you plenty of notice. So everyone wants to know, when is it going to happen? It is not going to happen right now, but we will give you the forecast of when it is likely to happen, and it'll get more and more refined as we get closer to the time. But essentially 2021, from a trading point of view, is going to be a period of massive turmoil. And turmoil is great for forex traders. Turmoil and chaos is what we crave. That's what boosts market volatility, and that's what gives you the big bucks. If you want the details on that 2009 low that we've just been talking about, and a bit more detail on how the Danielcode death cycle worked out, go to the art. This is an article I've written. It's called The Number of the Beast, the number, of course, being 666. And this is the first paragraph of that article. And I see this link is not active, but if you just copy that and paste it in your browser, you'll get to that article. If you want another way to get to it, just go to the Danielcode website, click on the articles tab, and go down to about March 2009 and look for an article that's called The Number of the Beast. You should read this stuff because this is history. This is what happened, it's given a modern interpretation as it was happening. This is an actual commentary on what happened at the time. But as time moves on, that becomes history. And the more you know about those sort of events, the better you'll be prepared for what's coming down the track, I believe, next year, which is not long ago now. So this is the fourth seal on the S&P for this week. And you'll see he gives you what the commentary from last week. This is done by Frank DB in Belgium for me. And he gives you the commentary for the current week upcoming. This is updated every Monday. Scott says in the 2021 case, you're looking for a low to a high first. No, it's got to be if it's a death cycle, Scott, it has to be high to high. It could be low to high. You could still get a turn there. You could still get a bear market out of it, but it wouldn't be as savage or dramatic. If you get the death cycle, which is high to high on the first hop, that's 59 periods on the 6-day chart, that's the one that creates all sorts of panic and pandemonium, which I think we will very probably see next year. So Frank gives you these charts, and with it there are the charts that he has, and you can follow that week to week to week. If you want to subscribe to the fourth seal, let Terry know. He will invoice you for it. It's $125 per month for any of the S&P, crude oil and gold, whichever one, or ones or more that you want. Okay, now, US dollar. I talked a little bit about the US dollar last week. The fate of the US dollar is such a big deal that it's totally underappreciated. But the big crux of the US dollar, I know writers will comment about it as the reserve currency. That's very important to Americans, but it's not so important actually for that market. What's important for that market is somewhere around 80% of all international trade. It's done in the US dollar. Now, that's dropped a bit now, but it's still massive percentage of international trade is done in the US dollar. This particular chart, DX, this is not the US dollar, this is the US dollar index, which is a balance of the US dollar compared to a basket of other currencies, the main trading currencies. So this is vital, that and there's all sorts of political as well as economic actions going on with the US dollar. It has to be kept within a certain range where the biggest trading partners of the US can live with it. It has to be stable is the main thing. You can see what happened back in 2007, which was during the presidency of George W. Bush. That's dramatic for other countries, and the US, the people who set the value of the US dollar, which is partly the market but very much controlled by the US Treasury, they're cognizant that it must work within these limits. Very, very interesting. If you see this, this is actually a 24-day chart, where you wouldn't expect it to be so accurate on the Danielcode numbers due to the length of that time cycle. But in fact, it's just about perfect on the Danielcode numbers. Have a look at this. We've got these two major areas. One is the rally during the Obama years into about March, April. Let's see, maybe I think it's saying end of 2014, early 2015. Look where the high went to, and I put an arrow on it. That's the high, almost exactly at the 1.5 Danielcode range. That's 1.5 of a previous range. All market moves are fractals of previous moves. So once we know those fractals, we can project using the Danielcode ratios what the future time cycles and time limits do. Excuse me. The antibiotics are working, but they haven't completely done their job yet. So if you lose sound for a second or two, that's just me coughing, for which I prefer that you don't hear me, which is why I'll mute it. So you can see in the Obama years, this market, US dollar index, making a high exactly at the Danielcode 1.5 number, which was an extension, a 1.5 times extension of a previous range. Now, all market moves are fractals of previous ranges. So that of itself was pretty nice and fairly interesting, but there'd be a whole lot of other people who could work out that 1.5 might be an interesting range extension. Look at the next two highs that have come during Trump's period, much more recently. Both of them went almost exactly to 103.935, which is 1.593 of a previous range extension. Now, nobody knows that number except Danielcode people. 59.3, it's twice time. It's the second number you find when you do a Danielcode tutorial. And so 1.593 is a number that no one else could have had except people who were familiar with the Danielcode ratios. And there it was. And that number had been on the chart long before the market got there. And it got there not just once, but twice. And it got there exactly. Now, look what's happening on the pullback. Look where this current market's closed. 90.040 is a 44% pullback of the range, the major range, down to the 2011, early 2011 low. There are other ranges in there as well, but I want you to just think about how accurately the Danielcode charts this thing, or more accurately, I should say, think about how accurately this market, which is a very, very complex market because it's subject to so much political, societal input, as well as just pure demand and supply. Look how accurately this market tracks the Danielcode. Now, for 2021, one of my New Year's resolutions is just pay a whole lot more attention to what's happening in the US dollar index. We know that Trump is a mercantilist. He really always wants a cheap dollar, cheap dollar, cheap dollar. That's what most businessmen want. It makes sure if you're selling a product, it makes sure the lower the US dollar, it makes that product or service appear cheaper to people from overseas. And that's a common request by mercantilists. But look where it is, 90.040. Very, very important that what happens with all these other markets, they're also related to the US dollar index. Those of you who were with us last week will see that we gave you quite a few examples of the US dollar versus various other things. This is, I've headed this US dollar rules. This is the US dollar. It's actually as I've said, DX is not the US dollar per se. It's a complex. It's the US dollar index. It's a balance. It's a invented number, if you like, that's created by the US dollar index against a trade-weighted basket of other international currencies. Look how extraordinarily accurate it is. You can see I put a vertical line on this chart, which I think is March 2020. Look how exactly the Australian dollar mirrored it. The high, the second high at the 1.593. The Australian dollar, which was fabulous and dynamic trading for big parts of the year, it was down around 55 cents. Fabulous stuff, and actually that's about where it should be, but the Reserve Bank of Australia thinks it should be at 75 cents, and they've certainly got it back up there now. But look at the exact mirror image of the Aussie dollar, the energy market. It's an energy currency. I mean, it's thought, and commenters will often say, that the Australian dollar is tied to the international price of iron ore, because that's Australia's biggest export. We literally have mountains and mountains of iron ore in Western Australia. And the Australian dollar goes up with the price of iron ore and down with the price of iron ore. And that's the normal comment from commentators. In fact, I know that does happen, but the reality is it's totally bound by the US dollar index. Currency fluctuations around the price of iron ore, correlation is not causation. In my view, the causation is the movement in the US dollar index. Have a look at this. This is the loonie, or the Canadian dollar, and it came a month later. There's that same spike high up into the 1.593 in the US dollar index, and there's no forex chart for CAD USD. This is USD CAD, just the inverse. But you can see it made its high one period after. This is about a Danielcode month, 24 trading days. It made its high 1 month after, and that's it. As the US dollar went down, Canadian dollar's gone with it. Here's another chart to think about. This is Euro US dollar. And there's that date again, March the 31st, 2020. That's the day that the US dollar hit the Danielcode blue line at 1.593 and reversed. Here's the euro. You would say it's not so reliant, wouldn't you? Boy, certainly got some correlation there. So one of my New Year's resolutions, think a whole lot more about the US dollar in 2021. I'm not going to speak much about politics today, but we have to, I think Christmas should be a politics-free zone. But one of the interesting things about Trump, he's not really a Republican. In fact, prior to 2016, he was a registered Democrat, as were his children. So his window of opportunity, 2017, 2018, up until the midterms, was missed. The Republicans at that stage had control of the House, the Senate, and the White House, the great triumvirate. But you had Paul Ryan was the leader of the Republicans in the House of Representatives, and he was never a Trump guy. In fact, after the campaign, you remember when that rather nasty video came out, Paul Ryan became a never-Trumper, effectively. And he was never really on side with Trump. And in my view, nor is Mitch McConnell. Mitch is concerned with his own legacy and his own power base. And that was the period where, if they got together, if the chemistry had worked, really substantial things could have been done. But of course, come the midterms now, the Republicans lost control of the House. So it's a battle about what can and can't be done through presidential directives. Obama had the same problem. There's that narrow window if you get it. So Trump's certainly been a magnificent booster of markets and very, very good for business. He's got rid of a lot of the nitpicking stuff that came in under the previous administration. But he lacked the people and institutional support to be successful. When you think back at it, here he was, he became very unexpectedly became president. He didn't know the people. he just didn't have the people around him who'd had those decades of experience in government, in legislation, in management of the big institutions, and he didn't have them, and that's why he was grabbing anyone that he thought might be supportive to him. So his nativist instincts were supported by many. I mean, he got this magnificent vote, didn't he? The most votes that a standing president's ever had in an election, but wasn't enough. What's been going on since the election is frankly just a bit stupid. So who's going to lead the Republicans now? Well, I couldn't give you the answer in December last year who was going to be the saviour of the Democrats. I can't give you the answer now who leads the Republicans. We'll see. One of the themes we've been working on during this year is Slo-Mo. I'm convinced that we need a better indicator for long-term trend. And this is the chart we have been using. It's pretty impressive, but the weakness with it is that it's biased. It's got a different setting for buy signals to what it has for sell signals. And you have to ask yourself honestly, are you prepared to keep those settings? Let's say what happened in here. This is the February 2020, the flash crash when all of a sudden COVID started to be taken seriously by the market. I think this was after some particularly nasty figures out of Italy. The market had managed to ignore COVID until then. So, you know, in the middle of that massive thrust down, I mean, there was a 45,000, 50,000 per one USD mini contract, for goodness sakes. Could you really put your hand on your head and say this market's still in the bull market? Well, Frank DB did in his weekly update. He said, I know it sounds silly, but this is still a bull market. But I don't think I would have the stomach for that. So we're looking for a slightly better version of that. And this is the start of what it looks like. This is called the 6SE, E for experimental. And it seems to work very well on all of the equities, S&P, Dow, Russell, NASDAQ, and Germany's DAX. We tend not to talk much about that, but we have a substantial number of European clients, and they make a whole lot of money trading the Danielcode on the DAX. So you'll be seeing various versions of this coming out in the new year. I'll have to, finalize the settings and get Terry to put it into a format that we can present it to you. But it's certainly worth experimenting with, that we are stepping back from our really day-to-day trading. And of course, when you do that, you're taking on more risk. I mean, it's easy to do these things, but the balance is, what's the additional risk you're taking on, and is it justified? It appears to me that it probably is, and I'm sure there are a lot of people who'd be interested in this particular formula. So that's the latest version of Slo-Mo, which we're calling 6SE for experimental at the moment. And it's a bit tighter than the other Slo-Mo you saw, and it's not biased. It has exactly the same parameters for the long side and the short side. So that's going to be our big new project for next year. You can see that coming up. So commodities we don't talk about enough. Have a look at this. Some commodities have been outperforming this year. This is the run in corn, which really started in August. And I mean, it's been a magnificent run, hasn't it? Very, very impressive. And have a look at soybeans. If anything, even better. This started, well, there was a bit of action between May and August, but essentially it started in August. That's soybeans. That's some seriously big trades in there, folks. We're going to see if the 6SE for experimental will give us what we're looking for on these markets as well next year. Okay, trade of the year, undoubtedly. S&P, the 6S program on the S&P, and the TO3 and the TO3 Plus program. This is what happened. This was the little mini flash crash in February. Pretty fantastic. And we made some part of $44,000 per one S&P E mini contract in that. reinforces my point. Bear markets are fun. Don't get frightened of it. If we do get a bear market next year, which I think has a reasonable probability of it, you should be excited about it, because they are fun, and you get these massive big moves where people get stuck in positions the wrong way, and the market acts to clean them out. This is the setup to that whole trade, and I want you to have a look at this, because these things don't happen by accident. There's the high of that bar against the, this was in February 2020, of course. I'm trying to think of what date it was, but you'll remember when you've seen the rest of it. There was the Danielcode blue line at 3395. Now, the high of that setup bar was just a handful of ticks away. That gave us a setup for the TO3 signal and the blue line sell and the 6S sell. This is what had happened a few days later. Have a look at it. $21,000 and more after that. We had a rally shortly after this big bar, and then more on the downside. Not by accident. There's the number, the blue line. These Danielcode members charts are published twice a week. That blue line had been on that chart for weeks before it got there, maybe even months. It's been there, sitting there waiting for target recognition. Markets do not turn unless they have target recognition at the Danielcode numbers. So there it was. That was a blue line trade and a TO3 sell signal. Actually, the blue line trade came from the bar before that, and then you got a TO3 signal on the bar before it, and a TO3 plus signal on the actual high bar. Look at that money. This is the DAX, which you don't look at much. Some of our European clients trade it. It's got a very, very big margin, but there is a mini DAX now, and you can actually trade it on the CME. So as we cover it at the Danielcode, it's worth looking at. It's a fabulous trading market. It's just as good as the US equity markets, and it turns exactly the same. This is the same date, same blue line number. It's been there for, it had been bouncing against it 1, 2, 3, 4, 5 days. Then eventually, whoosh, off it went. 37,000, and that was just until this particular chart came out. Then had a rally and gave us much more. And of course, we had exactly the same thing in the Russell. You can see that the Russell actually made its high 4 days earlier, right at the blue line number and the black line numbers. One's at 703.4, the other's at 705. I can't remember exactly where that high was, but it was on those numbers, exactly at those numbers, handful of ticks at all the variance we allow. And then 1, 2, 3, 4 days later, it gave a TO3 sell signal. It must have been a TO3 plus sell signal, I think. And down it went. So it's no accident, is it? There's no happenstance. This is all at the website. This is on the signals are given to you. The signals are posted on the weekend and Wednesdays night. And some of these numbers are on those charts for weeks, if not months, before the market gets there. This is the same setup we're looking at. And I've headed this, do you like some time cycles? We had a massive time cycle at that high and a massive time cycles at the low of that move. And what we say is when time and price are squared, a turn is almost inevitable. Now, I've stolen that expression from the late, great W.D. Gann, when time and price are squared. But we don't actually use it the way Gann used it. Gann had a number of lines on his charts that were 1 by 1, 1 by 3, 1 by 8, etc. And when a market was on one of those lines exactly, he would say that's time and price squared. I'm a great Gann expert. I spent 12 years trading Gann and going to spend money to all the gurus and collectors of charts and collectors of letters and Gann paraphernalia. Cost me a not so small fortune. But we don't trade Gann. And there were the end of Gann is he was a great promoter, but there are some real flaws in it. But nonetheless, I did steal that expression from him, but we mean something different. What we mean is that time is at a known Danielcode ratio, price is at a known Danielcode number. So you've seen so far the Danielcode numbers. You saw the blue line up there and the black line for Russell. These are the time cycles we had at that high, right at that high. Remember, this stuff is valid plus or minus 1 bar because it's valid to start the count either from the swing high or the closing high, contra the swing low or the closing low. And that can give you a variance of plus or minus 1 period. So we demand that these time cycles, to mean anything, are at plus or minus 1 period. Well, at that high, we had a 70 cycle, a 62 cycle, and a 44 cycle. At the low, we had a 29 cycle and a 70 cycle on the day before, and which, as I said, valid is plus or minus 1 period. 1 day before is valid, and then actually on the day of the low, we had a 50 cycle right there on it. That's what we mean by when time and price are squared. So what comes next? We celebrate Christmas and the New Year. Go ahead, forget about your trading. Celebrate Christmas, celebrate the New Year, because 2021, I think, is going to be a super year for Danielcode traders. When you've done all of that, we're going to have to start to think about the cost of COVID, not just domestically, but internationally. We need to think, why have the Asian and Pacific nations handled it so much better? Why have the US and Britain in particular handled it so badly? And to that you can add Germany and France and some of the other European nations now as well. Most people think, certainly that's sort of the way the media reflects it, the release of these COVID vaccines is the end of the pandemic. I have doubts about that. We know the known unknowns, but it's always the unknown unknowns that bite you the hardest. And remember, with all this talk about forecasting, we have to have that forecasting. We have to have the mindset that we are in the right frame of mind if we do get into a major bear market. Don't want that to come as a shock to you, but we trade the market, not the forecast. You trade what's in front of you from the Danielcode signals. Everything in the fourth seal says we wait for the Danielcode daily signal to pull us into that trade. So that's about it for me, folks, and Mrs. Needham, my children, Terry and his family. We all wish you a very Merry Christmas and a super prosperous New Year. And I've got my little picture of Santa down there being escorted by a fox and a couple of very handsome polar bears. And I've got that because I'm thinking of all you guys in that cold country, Dean in particular. Gosh, it's so cold. Why you live there, I don't know, but I guess you get the beautiful pine trees. Norbert will love this. He's got a property with beautiful pine trees on it, and maybe you get to see Santa. So congratulations on the year. Those of you who've been Danielcode clients, I thank you. Look forward to your support next year. And enjoy Christmas. Have a peaceful and blessed Christmas. Enjoy the week off before the new year. Rest, recover, feel good, feel strong. Get ready to tear the world apart next year. If you're interested in becoming a super trader, you want to learn all this stuff I've shown you, just let me know, jneedham@thedanielcode.com. Email me. Let me have your phone number if you like. I will be happy to call you and have a chat about what the tutorial will do for you and everything else as well. Remember, the business of trading futures and Forex is not to be right, it is to make money. And if you haven't already, you're most welcome to have a free trial of everything at the Danielcode. Go to www.thedanielcode.com to start your free trial. Just hit the register button. Any issues, contact Terry at support@thedanielcode.com. So we're on holidays now, but Terry will be there to answer any of your questions, and I won't be far away. Merry Christmas, folks. Happy holidays. The best of everything. Thank you, Mark, and Scott, and Alan, and all of you. Enjoy your Christmas break, and I look forward to seeing you again next year. Goodbye for now. Thank you, Graham. And Rob, you over there too. Eventually they'll take these restrictions off so I can come and visit you and we can have another couple of beers. Okay. Thank you, Suhasini and Martin. Merry Christmas, my friend. Yeah, beers are always good, isn't it, Rob? Good on you. All the best, folks. Bye-bye for now. My family's waiting for me to come and have lunch, so I have to depart. Thinking of you. Bye-bye.